The numbers are in, and July was crazy. Good morning, everyone. I hope you're having a fantastic week. I'm Rico Castillo with Coldwell Banker Realty, and I do a lot of videos talking about the different communities, the best neighborhoods, the best schools. I talk about the pros and cons, cost of living, and tips and advice when buying or selling a home. So if you're new here, make sure you subscribe, tap that bell so you won't miss any of my future videos. So the numbers are in, and July was crazy. So we'll talk about the July numbers, what it means for August, and also what it means from the buyers and the sellers perspective. But before we go over the July numbers, let's talk a little bit about the mortgage side. So the mortgage rates have been kind of between 2.82 to like 3.25. It's been going kind of steady around that range. FHA is a little bit lower, but the reason, by the way, don't expect it to go any lower. The reason why it's kind of staying steady around that range is because the banks really don't want to have this frenzy of refinances because they can't handle it. So of course they're going to want to keep it a certain range to where they'll get a steady influx of new business, but not too much where they can't handle it. Okay, now you'll see a lot of advertisement out there probably, and so this is sort of like a warning to, or give you an idea to at least be careful out there, that you might see some advertisement about rates being in the low or below 2%. Be careful, because most of the time, and you can get those rates. However, you will have to pay points for them. And it can range anywhere from 1, depending on the rate that you want, from 1 to 4%. And a point, by the way, it means it's 1% of the loan amount. So if you have refinancing, if your loan is now $450,000, 1% of that is $4,500. And if you were to pay 2 points, 3 points, or 5 points, or 4 points, I'm sorry, then it's going to get a lot more expensive. But however, it's up to you if it's worth it for you to pay that amount just to have a lower rate and have that lower payment for the long haul over time. That might be worth it for you. So just make sure that you look at the numbers before you make your decision, and talk to your real estate agent too, because they'll be able to give you some names, numbers of some really reputable loan officers that will give you the best rates and take care of you. And another thing I wanted to mention was, I saw this in the news earlier this week about the forbearance having declined in the last several weeks. Forbearance is when the banks allow you to make lower payments or pause your payment altogether for a while so you can afford staying in the home. However, again, as I mentioned on my last video regarding the market update, the forbearance is not free. Okay, that lower payment, the difference, as well as the pause on the payments, all those will be added towards the back of your loan. You'll pay for it one way or the other. Okay, so make sure you keep that in mind, that it's not free. But anyhow, it has declined in the last several weeks, and reason being is because of what the government plans are to slow that down, which is good. However, they are expecting in September on forward that there's going to be an increase of forbearance due to those plans. The original plan is now expiring. So let me go into my computer. I'll show you the graphs for the last month and go through the numbers that way, and what it means from the perspective of the seller and the buyer. All right, so this is the graph for July 2020 for Sacramento County. And if you look here, okay, and we're gonna compare down here as well. But if you look here, the solid red green is the sold homes, the lighter green are for the for sale homes, and the red line for the pending. And pretty much to if you want to look down here on the left bottom corner, it shows that the number of homes for sale, which shows here, okay, in the graph, it actually went down from June to July by 11.4%. However, the number of sold homes went up 11.6%. So, seller's market, yes it is, and a lot of people are still buying, and it means less homes for sale means, of course, fewer inventory in the market. Pending went up 3.8%, and the scary thing is that if you look over to the right here, this is from the last 30 days, pending has gone up 22.4% already. So what does this number say? Okay, well, if you want to, and this is mostly for the sellers. So from the seller's perspective, okay, homes are selling quickly. However, homes that are selling quickly are actually homes that have been upgraded. Okay, so this is an average. So all this will make sense more once we look through the rest of the graphs. But just know that from June to July, the number of homes on the market went down, while still many of the number of homes that sold went up, and the number of pending homes went up as well. So August numbers are going to be very interesting, and so let's take a look at the rest of the graph. So what typically happens when there's low inventory in the market and a lot of buyers looking for homes? This is what happens. This is the average price per square foot, and if you notice, from June to July it went up, and the scary thing is if you look down here, in the last 30 days it's gone up another 3.5%. Okay, so the price per square foot is a good indicator that, of course, everything's getting more expensive. However, do not use it to price your home or to get a value on your home. Make sure that you go off of the market value around your home. Look for homes that are similar to your homes within a quarter to a half a mile and use that. Don't use the price per square foot. It's just a good indicator, give you an idea that the market, where the market is going, but it's not a good indicator for you to actually put a value on your home. So in terms of the days on market, if you look here, this is interesting because looking at the numbers, it's gone up from 25 days in June to 28 days in July. However, the good thing is it's still selling at 99% of the list price. Now, sellers, please take note of this. 99% doesn't mean that's all homes are selling that way. This is an average, so meaning some homes sold at a lot higher price and some homes sold at lower price. The reason why I want to mention that is because there are a lot of homes out there that are in pretty good shape, well maintained, but they don't have the upgrades, and the homes that are selling at a higher price are actually the ones that have the upgrades and also priced well. Let me just mention a little quick thing about that. So what happens is that imagine if your buyers out there, are a lot of buyers out there that are looking for homes, and a lot of them are frustrated. Look at it from their point of view. Okay, when they see a home in the area that they're looking in and they're priced pretty much around what the market value is, all right, but one home has considerably more upgrades, so it's priced pretty much probably about the same or maybe a little bit higher, but it's got considerably more upgrades. What do you think, which homes do you think they'll make an offer on? Okay, so it's of course going to be the ones with more upgrades. So just because the market is hot doesn't mean that you can price your home at any price and expect multiple offers. No, you have to follow what's going on, or interpret what the market is saying, meaning that those homes that are selling quickly are the ones with upgrades and priced well. If your homes are well maintained, in good shape and priced well, it's going to take a little longer for you to sell your home. And if you do have a time constraint in terms of when you need to sell your home, you may need to price it a little bit lower just to get your home sold quicker, and so you can meet your timeline. Okay, so price it at market value and let the buyers drive the value of or the price up, instead of you pricing it high and expecting the buyers to go up to that amount. So that's the wrong way to go. So anyway, the good thing is, again, even though the homes are staying in the market longer, it's still selling pretty much at 99% of the asking price. So the sellers, it's taking a little bit longer to sell their home, but they're getting almost what they're asking. So what does this mean from the buyer's perspective? Well, no lowball offers. Have your agent do comparables on the properties, on the property that you want to make an offer on, and they'll determine which homes sold quickly due to upgrades, as well as the ones that's staying on the market longer. Okay, so that's the way you're going to have to approach it. No lowball offers, even if they've been in the market for a while. That might be something that you can make slightly less price offer, but it doesn't mean you lowball them, because they'll eventually sell anyway if they price their home once they price their home lower. Okay, so keep that in mind. All right, so let's take a look at this. This is the average price per square foot, or average price for homes that sold, and average price for the homes that went on the market. So if you look here, the red is, of course, the sold, and green is for sale. So if you look at this graph, well, actually the best thing to do, maybe let's just go look at the market highlight. So if you see here, you'll notice that the homes came on the market in July compared to June, came in at 4.6% higher and 15.1% higher from the year before. And the homes that actually sold at 3.7% higher from the previous month and 8% from the year before. So what does this tell you? The buyers are still willing to buy the homes even at a higher price, because the interest rates are so much lower. The payment on the homes are comparable to what they were if they were lower. So interest rates is helping the market drive up the prices of the homes, because the buyers can afford it because of the lower payments. Okay, so let's look at the last graph here, which is months of inventory. So keep in mind that the buyer's market means 6 months worth of inventory. A seller's market is 3 months of inventory, and of course neutral is between 3 and 6 months. This it's less than 1%, close to just 0.5% actually. It means that it is a seller's market. So if you look down here, we've already seen in the previous graphs that the months or the number of homes on the market went down. Actually went down 22%. Okay, the good news is, if you look over here, is that in the last 30 days it's gone up 7.7%. So looking at all the graphs here and put it all together for August, it means that the homes are staying in the market a little bit longer. They're starting to get steady in terms of pricing, but they're still going up. The reason being is the interest rates are low. Buyers are willing to pay a little bit higher for the homes because it's more affordable for them, because due to the rate being a little bit lower. So it means the sellers can put their home in the market, but expect it to take a little bit longer. Just be patient. As long as you price it right, it will sell at close to your asking price. All right. And for the buyers, again, be prepared still. You might not have as many competition, but you still will have some competition, is because there's such a low number of homes on the market. And so when you make your offer, make sure you price it accordingly.
Well, I hope you like this video, because I'm going to be doing a lot more videos like this to help you get familiarized with the process, and hopefully so you can make a better and more informed decision. And so if you haven't yet, make sure you subscribe, because the more subscribers we have, the better and more videos we'll be able to make for you. And so you make sure you subscribe, tap that bell so you won't miss any of my future videos. Okay, so until next time, see you around town.